Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. Welcome to our show that's for you and about you. Those of you that work so hard for your money and you want your money to start working harder for you right now. You want that freedom, that cash flow prosperity today, not 30 or 40 years from now, but right now to live that life that you love, doing what you love with those that you love. But most importantly, guys, about living a life of meaning, impact, and purpose, that as you become blessed financially, you can bless more lives too. And so, guys, I appreciate you joining in and tuning in and binging and doing all that you've done here today. Like, I really appreciate creating that ripple effect through you guys, because you guys really are seriously the best audience I could have. Hey, as a quick reminder, you can go to our website, moneyripples.com. If you find yourself in a place, you say, hey, listen, I've got, at least $150,000 of cash that's sitting around doing nothing, or I've got at least $200,000 of equity in my home, or both, guys, you should definitely go to the contact us page, reach out and see what you can do today to create more passive income right now. So make sure you go to that contact us.
Chris Miles was able to retire twice by the time he was 39 years old, but he's not content to just enjoy his own financial freedom and peace of mind. Chris wants you to have your own ripple effect so you can live free today. He's not the financial advisor you expected. He's the anti-financial advisor you deserve. He's jumping behind the mic right now, ready to make waves. Here's Chris Miles.
All right, guys. So I want to bring on a special guest here, someone that I've only recently been able to get to know, and such a pleasure, a man I respect so much. This is a guy by the name of Dan Makert. And I'll tell you, just barely retired. He was a retired Army Infantry Colonel. He also did 2 tours in Afghanistan. This is out in California. He's been in lately. With the California National Guard. He's been program director for competitive shooting and biathlon programs, and human performance research analyst and tactical fitness coach. So he's been in the fitness game. He's been obviously even some of the responders. I mean, he's the guy that gets the call in the middle of the night, when there's an emergency in California. He's done it all. And over this 34-year career, he's now just retired and moving into this next phase. And he's actually moving into this place of doing investments and doing those things that many of you guys are either doing yourselves or looking to do. He is right in the middle of that journey. And so I want to interview him about that and just get his story. So Dan, welcome to our show.
Hey, Chris, really appreciate it. I really enjoy your podcast, and I think you're doing a great service for people out there.
Yeah, I really appreciate it, man. So give us a little bit more background on you. I mean, I failed to mention you're married and you have got kids and everything too, but tell us a little bit more about you.
Yeah, so I think as far as your audience is really concerned, probably the most kind of pertinent aspects are totally traditional, kind of investor, go to college, get a good job. Well, in my case, I don't know if it was a good job, but like I wanted to have adventures in the Army as an officer. But, in America's Army, it's a respectable career, and you can, earn a good middle class income rising up the ranks in the Army. I didn't really do it full time until the last couple of years. Last 4 years, I spent a lot of it on full time. I was a traditional National Guardsman. I had a background in project management and construction, demolition, environmental cleanup. And then I spent a number of years as the at-home parent, working just part-time in the National Guard. And we were savers. And then I got turned on to you through Lane Calco's podcast. You did a thing on whole life policy. Oh, yeah. And I was like, holy crap, man. I wish the guy who talked to me about that when I was 24 did a better job, because that would have been a good thing. But I fell into the trap of mutual funds, in the late 80s, early 90s, mutual funds were all the rage. Like, we're beating market returns. Yeah, okay.
All the good stuff.
You've covered that in depth on, kind of the lies they tell, and like, hey, who took my money? Who moved my cheese? So I figured that out and started moving out of kind of your kind of high cost, went into index funds and exchange traded funds and kind of followed the John Bogle method of like, hey, don't waste your money trying to beat the market, just be the market. But then I heard your talk, and I had a buddy, another Army buddy of mine. He did not put a lot of savings into the stock market, and he had a bit of a panic attack talking to some other military guys of our peers, one who was a police officer, and then part-time National Guard guy. The other guy was a full-time Guard guy, and these guys had pensions.
Yeah.
And he's like, I don't have a pension. Wait, and I don't have, like, my IRA is like really small. Like, his money was in real estate. Yay. Except he had a lot of lazy equity. And so he suddenly realized he needed to do something quick to like have like a retirement. Yeah. And since I was staying at his house while I was working in Sacramento at our state headquarters, I listened. I was over. He's like, "Hey, you gotta listen to this podcast. Check this out." And so that one thing led to another, and then here I am, like with you, and I'm like, "Oh man, I gotta shift. I gotta shift resources." I had all this horribly lazy equity in this very overpriced Silicon Valley house, and started working with Craig and started going down the road of redeploying capital into like cash flowing investments.
Yeah, that's really, really interesting for sure. Because I mean, I see a lot of people, especially the millennial generation, right? They've only seen up markets, and they believe that, hey, you know what? If I just keep plugging away, I'm going to get there. It's kind of like what you experienced with the 80s and 90s, right? It was like the market was really moving, especially after the first dip in the 80s, and then it started taking off. You were kind of seeing a similar pattern too, weren't you?
Yeah, we moved here to Silicon Valley. My wife graduated from business school at Carnegie Mellon in 1997. If we had graduated, she had graduated in 1996, we would be having a different conversation. But we were, basically, really, we were 12 months too late to really cash in on that initial kind of internet boom, but we participated in that crash. And I watched how much was that we had. There was a stock split or a stock spinoff of the company she was working for, and all of a sudden had an extra almost $30,000, and then I watched it just poof vaporize into nothing. But we were very fortunate. We had managed to not be over committed into any one area, and we were, nothing smart, just luck that we were trying to buy a house. So we had moved a lot of stuff into cash right before that .com implosion in 2000. So yeah, what people who've only experienced this bull market don't really understand is like how quickly and rapidly you can all of a sudden have, a 50% drop in your values of your publicly traded securities, which, depending on how old you are, where you are, I mean, may not be a bad thing as long as you don't sell it. For us, at the time, I mean, we ended up doing a lot of strategic buys, and then especially in 2008, when the 2008 implosion happened, we were fortunate. We're in Silicon Valley, like our housing prices didn't drop in value. The only thing that dropped was the rate of increase. So,
right.
And, my wife was working at a startup technology company. So, I mean, there was no, employment problems. So for us, that was a time to buy. I went heavy into, buying depressed, really index funds is what it was. The S&P 500 index fund was like pouring money in there. And then the same thing when I deployed to Afghanistan the first time, our household income went up, and because now I got my tax-free combat deployment. And so anyways, if you haven't lived through it, and if you've just, especially at a disadvantage, if you've put the bulk of your money in towards that peak, right? Yeah. And then all of a sudden, now it's going to take a long time to recover. So it's a good lesson to be diversified, and what you preach, which is like, hey man, have cash flowing assets that are the money's working for you. You're not working for the money.
Yeah. So how's your perspective shifted? Even recently, as you started to, whether you're listening to this show or even just as you're starting to learn strategies now, what's shifted in your perspective?
So some real eye openers were, bonus depreciation, forced appreciation, these terms in the real estate market. Sorry, my dog's yapping at my son. The cost segregation studies, and then real estate syndications. I didn't even really understand what real estate syndications were. So, to see that difference of like, oh, it's got an 8% cash on cash return. And you're thinking, well, 8% is not that great, but like, oh no, wait, but then there's the, depreciation, which now means you're not paying taxes on that 8%. And then, hey, that's the pro forma. And, no guarantees, past performance, no guarantee of future performance, but a lot of times, they're conservatively underwritten, and that's kind of on the low end, and you end up on the equity event on the outside, and it turns out that now your effective internal rate of return is 15, 16, 18, maybe even into the 20s. And that you start doing the math on like, well, what does that look like over 7 or 8 years? And you're like, oh, that's like tripling my money in like 8 years. Instead of a 50% increase if the stock market continues on its path, which of course it won't. It always has some type of a correction. So those things really changed my perspective. The idea of smart leverage, right? When I got back from Afghanistan in 2019, we refinanced into a 15-year mortgage because I'm like, we're going to pay this thing off. It's going to be great. It's not even going to cost. Rates have dropped. It won't even cost us anymore. And then not even, I think only 10 months later, I'm listening to your, Land and you, and I'm like, well, that was dumb. That was really dumb. In fact, what I should have done was done that before I went to Afghanistan, and then and all that money that I could have taken out of the house, plus my combat pay as a colonel, I would have been like, I could have been on this thing sooner. So don't spend too much time looking back and regretting what you may or may not have done in the past. Just take action now. Don't suffer analysis paralysis, and start getting things that are cash flowing now. And be patient. It's there's no get rich quick, and with this type of stuff, it's a good way to get burned.
That's for sure. Well, and that's the thing I love is that, you're like the classic example of what would be the poster child for the savers, right? You saved your money, you packed money in the stock market, even at the lows. You even didn't even try to buy a high. You tried to buy a low to sell high, right? You're trying to pay off your mortgage faster. You're doing everything you're supposed to do. Yet you're like, wait, how can I leverage my equity better? How can I use this money to actually generate cash flow versus just doing this? And look, I can make a better return than the market and not take as much risk too.
Oh, I know. I thought I was all smart. I had, in the IRAs, we got a huge fan of the Roth IRA. Everything's, pay taxes now. Like my plan is to be, have really high income when I retire. Like I'm not going to have low income when I retire. I'm going to be making even more money in the future. And so, and I live in California, a high tax state. So if I want to stay here, I'm like, I need to have a plan for that. So I thought I was all smart. Like, okay, I got the bond fund here, and the interest from the bond fund goes right into the stock fund. And so every month I've got this amount of money going in. Okay, great. I think it's if I remember correctly, over the lifetime of we're 10.1% annual compounded. Well, that's great.
That's really good.
I mean, that's nothing to sneeze at, but okay. So 10.1% over, maybe almost 30 years, but the bulk of all that money went in the last 10. Right. So, and even really probably 80% of it went in the last 10. And then in the last 10, probably 80% of that went in the last 5. So, and then we've had this 10-year bull market. So it's kind of like, it's really not going to get any better than that. And there's a really good chance that there'll be an extended period of, you could maybe a 2-year bear market. And as you're approaching 60, you're like thinking, hey, that would have been great 20 years ago as I'm buying, but like I'm looking for, cash flow now, right? Hey, I'm not want to retire. Like, I'm not going to have an income. This needs to be my income. And like, that's not enough, man. All these, like, I just read like some article from, brokerage company yesterday about like, hey, planning for retirement. Here's the model, $1 million, do this. And they've got this much Social Security. And I'm like thinking, well, that's a really crappy return. Like, you're thinking that's all you're going to make off $1 million. I'm like, that's retarded. Like, why would you settle for 3.5%? I'm like, it's not even keeping up with inflation this year.
No, definitely not. Well, and I even heard somebody recently who said they expect, I think it was Chase, JP Morgan Chase, they said that they were only expecting like about a 5.4% return over the next 10 years in the market, right? So, and that's if you're in the market. That doesn't include a lot of times people move more into bonds, especially when you move into retirement, and that kind of thing.
Yeah, and I don't know that. I'm like thinking, dude, that's not a good idea either, man. You should, like, if you were going to stay in the market, it'd be like, well, you should have been buying like individual dividend paying stocks and just live off the dividends. Don't even talk about selling anything. And then bonds are not really a good idea. I mean, they're like maybe a little bit, but the typical thing of like, oh, hey, as you get into retirement, you're going to switch into 60% bonds, 40% stocks. And I'm like, that sounds like a horrible idea.
Yeah. So what do you see
you're not
yourself
going to keep
doing
up with inflation?
Yeah. So what do you see yourself doing to try to protect your money now? I mean, because obviously the market, there's not a lot of guarantees there, and trying to diversify in that could still mean you lose money. So what are you looking to do with your money now to
we're shifting heavily into just private equity, right? I mean, fortunate that, at this stage of our lives, like, we qualify as accredited investors based up on all our savings, right? So that kind of helps accelerate that process. Although I really appreciate what's happened in the last just couple of years with the ability of private equity partners to be able to take on small numbers of non-accredited investors. I think that's really good opportunity for people, especially those guys who are offering, $50,000, $60,000 minimum investments.
Yeah.
That kind of opens the aperture for people who aren't quite there yet. You might have a net worth of only, $250,000, $200,000 or something, or maybe even less, but if you've got something. So for protection from kind of the neck, I've gone into real estate. I've put into, just in the last 2 months, I'm in 3 real estate syndications and then an ATM fund. Invested in ATMs. They have ATM fees. Government issues all those social welfare benefits on debit cards. So, there's going in for some recession kind of proof investments that'll cash flow. And then, so really, that's what we've been doing. So probably moved, maybe not quite 50%. Maybe it's like about 40% of our total kind of net worth out of publicly traded securities into real estate or real estate like things.
Like syndications, especially tax advantage ones, right? As you mentioned before.
Yeah, I did the whole life policy. Definitely, like, that's a good strategy right there, as a way to have a very conservative, protected, moderate, probably right at inflation adjusted rate of return, but lets you double dip.
Yeah.
Went with Secured Investment Corp, one of your sponsors.
Awesome.
American Home Preservation.
Oh yeah.
Got a small amount in crypto.
You gotta have a little bit to play with, right?
Well, maybe like, I don't know. I don't even know if it's 1%. It's less than 1% of our net worth, but just to understand it. Yeah. And I would. It's not for the faint of heart, and but it was. There's some interesting things there.
Yeah. Well, now I know we're kind of wrapping up the show here, but what do you see yourself being in the future? Like, what's your vision of what you want your life to be?
Yeah, that's a great question. So I'm a huge kind of fan of the founding fathers and kind of the whole principles of this country, kind of why I signed up to protect it. So those guys were entrepreneurs. Those guys were capitalists. I mean, they were But they were also very focused on the community. They were, creating that ripple effect, right? How can I, impact the lives of those around us and make things better? So, from a vision standpoint, I do need to find something to do with my time. Now that I've, retired out of the military, I'm looking at perhaps doing some leadership coaching, maybe doing something in technology or pharmaceutical sales, or there is a defense technology element here in Silicon Valley. I mean, I'm looking at that too. So looking to continue to contribute somehow to the community around me, but all the while, teaching my kids and providing for my family that kind of self-reliance of, hey, this country was founded on liberty, freedom, property rights, innovation, and let's support that. Don't miss out on participating and strengthening that part of our national identity and our community.
Absolutely. I love it. That's I love that goal. Again, I'm a founding fathers nerd too, so I'm a huge fan of that. But
good.
Dan, I just got to tell you, I really appreciate your service, the ripple effect you've already created throughout your career, and even afterwards, and the ripple effect you continue to create. I mean, I know just me being in this country, I know we're indebted to a lot of the work that you've done personally, and as well as many others.
Thanks. Appreciate that. Did my best.
Yeah. Well, appreciate you having our show today. It's really, really enlightening to kind of see your perspective and see what you're up to and what you're doing, and just that hope, that progress that you have and what you're creating. It's really been awesome to see. So
I appreciate that, Chris. Really appreciate what you're doing for your audience out there. And, my advice to them would be, get connected. That's probably the thing that's the hardest, is like, you really need to have a community that you trust and people that you trust, and they can help steer you in the right direction, so that, you don't want to be shooting blind in this kind of stuff when you're dealing with your, 5 figures of your future, financial well-being. But at the same time, you don't let that scarcity mindset or fear kind of hold you back. Don't spend too much time analyzing and agonizing over, like, just trust somebody, find somebody you trust, and then execute, take action, and commit.
That's right. Yeah, appreciate that, Dan. Well said. So, well, everybody, you heard them. Just know that everything always requires action, right? It's taking the right action. It's not just taking any action. It's taking the right action to get the right results. And so, everybody, we challenge you all to definitely go out there, create that ripple effect, do something that will make your life better today, especially something that can actually improve your life, and hey, even your financial life too. But again, we want that to be in all aspects of your life. So everybody, make it a wonderful and prosperous week, and we'll see you later.
Visit us online at moneyripples.com for more resources to help you fix money leaks and get your money working harder for you now.